Good morning, guys. Welcome to the show. Listen, everything's proceeding exactly as I expected. The market this morning is starting to level off a little bit after yesterday's over 800-point drop in the market. Now, what does this show me? What do I see when I see all this happen? This really showed me a lot. And it showed me I was correct about some things, and one thing I was a little bit off on. But I'm going to explain what it is as we go through the markets this morning. Now, so we're going to turn the charts on right here, and we're going to start taking a look. First, we're going to take a look at cryptocurrency. Now, all of these things in the market, they are showing us what's going to happen the next time this comes. This is going to come back. This is just the first round. This is like round one in a prize fight. Of course, round one in a prize fight will show the managers of the different fighters. It shows them. They're standing there watching around the ring, the managers. And they can see the problems with their fighter or whatever, and they can see how the fight's going to progress in the following rounds. This shows me how this market is going to react to what's coming. It also shows me a trigger. It shows me an awful lot of things. And so first we're going to start, what do we see happening with cryptocurrency? Well, it's just like I expected. Cryptocurrency is a speculative investment. And so I expected that what would happen is when the market drops below 20,000, we're going to get a huge crash in cryptocurrencies. But I'm a little bit off on that because it looks to me like the market's not going to have to wait to go below 20,000. On the next crash of the market, cryptocurrency showed us right here. Do you see the size of those big red candles down? This is showing us what cryptocurrency is going to do when the market really crashes, because cryptocurrency right now is a speculative investment. And everybody is going to be running for the door on almost everything when the market really tumbles. And it's coming. A huge market crash coming. The fear that it's going to generate is unparalleled since what happened in 1929. That's what's coming. It's coming. And let's take a look at silver. What did silver do? Well, it's pretty obvious what silver's doing during the crash. People are getting scared, starting to get scared of the crash. And silver was down at 14.25. Now silver's went up to 14.46. And it was for a period there, it was touching 14.50. A 25-cent move upwards in price. Gold. Let's take a look at gold. I normally don't do the gold charts, but gold follows silver. Well, what do we see gold doing? We see it moving upwards. It was down 11.95. Now it's 12.08. It's showing what it's going to do. And the reason why the gold and silver is going to do this, because this is a safe haven asset. It always has been all the way through history, a safe haven asset. Unlike cryptocurrencies, which is a speculative investment. Okay? Now we're going to take a look at what the stocks are doing today. Today it's doing exactly as I expected. It's up 43 points. Last night I called it. I said that the market crash that was on, it was ending. It was going to be is smoothing out, done, finished, finito. And because the bond market has come back down again to 10 years back down to 3.17, right? Now, of course, I shouldn't have gave that away because I haven't looked at the 10-year yet. Okay, but this is going to happen again. The bond rates are going to level out for a little while right now because money came out of the stock market, came out of equities, and it's going into treasuries, and so the price of the yields on treasuries fell. It took the pressure off. of what caused this in the first place. And so now that the pressure's taken off, the market's leveling out. That's exactly what I expected. Okay, so this also tells us what's going to happen. When the treasuries go up again, and they're going to, when they shoot on by, this time they just went up to 3.25 and then they fell back. Next time they go up, they're going to shoot on by 3.25 and head the U.S. 10-year is going to head to 3.50. It's going to be on its way to 3.50. That's when we're going to get the big crash in this market. But the market is going down in steps. It's going to continue to go down in steps as yields rise on the treasuries. Eventually, this is going to cause an all-out crash. So what we're seeing now, you're going to get an awful lot of analysts out there who are going to be calling this a correction, what just happened. They are so wrong. They were so wrong. This, right now, in the future, is going to be looked at as the first part of a major crash. This is the first leg down on a major crash. A major crash. Not a correction, not a small crash, a major crash in the markets. This is the first leg down. But now that it's leveled out, they're going to say, oh, it was a correction, a little minor correction in the stock market. It's still part of a larger bull run or whatever. That's all baloney. This is not a correction. This is going to be, now it's leveling out for a while now. That's right. It might even go up. The markets might go back up. In fact, they might go back up almost to their peak and everything. But that doesn't mean that this isn't part. This is part of something that's going to take longer. So this is the first leg down. Bonds and rates today. We'll take a look at these bonds. Bond yield is starting to rise back again. That's because the market's leveled back out again. The bond yield is starting to rise. It was down to 3.17. This is exactly what I expected it to come back. It depends. This market crash, how long it's going to take for the next leg depends on this bond market. How quick this bond market can go back, the yields can rise again. How quick are the yields going to rise again? We're going to have to, that's what we need to watch. That's the key indicator to how much time we got before the market falls again, is how long these take to bounce back. I'm going to guess, I'm going to say they're not going to take more than 2 months. I don't think they're going to take more than 2 months to bounce back to dangerous territory again. But it could be a lot sooner. They could bounce right back in a week, you know, in which case we'll have another leg down in the market. It's just as simple as yield chasing, is what it's as simple as. They're chasing yield. Everybody's chasing yield, and they want safe haven, and they consider these U.S. Treasuries to be the ultimate safe haven, better than gold. Can you imagine? Can you imagine? Anyway, U.S. dollar index today, 95.16. So this was a bit of a shocker to me. I expected the dollar to move up more than what it did during this leg down in the market. So we're seeing more strength in gold and silver than I expected, and we're seeing less strength in the dollar than I expected. But I still stick by my guns. The three assets that are gonna do good during the market crash are gonna be gold, silver, and the dollar. Those are the three that are gonna do good during the market crash. Now later, when the whole complexion, the whole thing changes, then only gold, silver, and crypto is gonna do good, and the dollar's gonna die. That's what we're gonna have when the whole thing switches. But it's gonna switch when the Fed relents on their monetary policy. Now, let's take a look at the oil today. What did oil do during this little episode? Oil prices fell. Now, the oil prices fell because during deflation, commodity prices fall, and that's the reason why the oil price went down. Okay, so we're getting the complexion of the way things are going. We're getting a study so we can study this and see how things are going to go, because this is how they're going to go in the future. This is going to follow through. This is going to continue. This isn't some freak little event that just happened and it's not going to have... No, this is going to continue. This is going to be more of this. And the trigger for it is the bond market. And the really biggest trigger of all is the U.S. 10-year. Got to watch that 10-year. Watch what that 10-year is doing. As it rises, we're heading for our next episode in this saga. Cryptocurrency market capitalizations today. You know what? They lost $18 billion of market cap, and Bitcoin dominance went up to 54%. It shows they run the Bitcoin itself. Bitcoin holds the best of any of them because that's that's the anchor, right? And you see all the other coins. Look at them. Look at that. Just waterfall cascading downwards. At the bottom of the market crash, guys, the stock market crash that's coming, the best investment in the world at that point in time is the cryptocurrency is going to be at rock bottom. All of them. Gosh knows how low Bitcoin could go. I mean, it could go a lot lower than it is now. But all of the altcoins are going to be extremely cheap. And if you scoop them up at that particular point in time and then you HODL them, that's how you get rich. Okay? Thank you guys for listening. Like and subscribe, and we'll catch you in the next video. Bye-bye, guys.